Just buy, hold, have a long-term time horizon, and learn how to take pain. And when there is pain, you buy more. Unless something changes the thesis that suddenly we're all going to turn into Neanderthals and nobody's going to use technology ever again, it is going up.
What's happened so far since Liberation Day, Bitcoin has been the best performing asset so far. And I think that when you have uncertainty, when you have exuberance in a market, people are looking for what is the asset that is going to be most sensitive. They want to express the view.
And unless something changes that we're not breaking the financial system.
Raoul Pal and Matt Hougan emphasize the importance of a long-term approach to crypto investing, advocating for patience and buying during market dip. They highlight Bitcoin's resilience, outperforming traditional assets, and its strong foundation for future growth. Hougan discusses the impact of institutional investors like BlackRock, reducing risks and setting the stage for significant gains. With regulatory and custody risks minimized, he calls this the best time in history to invest in Bitcoin, predicting massive returns as adoption grows. What strategies can help investors handle crypto's volatility? How will institutional adoption shape the market? Share your thoughts below.
There's so much good things going on in Bitcoin specifically and crypto more broadly that we should be ripping to all-time highs right now. And because of this macro volatility, we're just awash on the sea of Trump's tariffs, uncertain of where we go next. It's annoying. I can't wait for it to be over. I'm with you. I want some certainty. I care less about what it is. I think once we have uncertainty baked into the market, the fundamentals of crypto will take back over and we will be back at all-time highs. I've actually been tremendously heartened by the strength of Bitcoin in the face of this macro uncertainty, right? Since the election, I know everyone's hyped about gold. Since the election, Bitcoin has strongly outperformed gold. It's strongly outperformed the S&P 500. It's crushed the Qs. It's in a position to race to all-time highs and then beyond. But we have to get through this uncertainty. At the end of that meeting, we had done a discussion on Bitcoin. I could have gone out and bought $1,000 of Bitcoin. I'd have $88 million today. And instead, I left the office and got a cup of coffee, which is a true story. It's a very expensive cup of coffee. But then I use this as an example because let's say I had decided to buy $1,000 of Bitcoin. The largest exchange in crypto at the time was New Liberty Standard. And this is its terms of service. You can buy Bitcoins by sending a PayPal payment to this address. I try to process it in 48 hours. This is a personal hobby. Everything on this site is legal as far as I know. So like it's easy to say today, I should have gone and bought $1,000 of Bitcoin. But at the time, it meant sending $1,000 to a random dude who said it maybe is legal what I'm doing. Like there was just so much risk. And if you think about it, that's been true throughout crypto's history. We had trading risk. Then we had custody risk. Where would I have custodied my crypto? Probably at Mt. Gox. Like, oh, that didn't turn out so well, right? And then we had regulatory risk. And then there was the risk of would institutions adopt it? And, would we ever get an ETF? There were just so many risks in crypto all along the way that from a risk-adjusted basis, like, of course, from an absolute basis, I should have gone out and bought Bitcoin when it was $1. But adjusting for all the risk, the trading risk, the custody risk, the regulatory risk, etc., it was a terrible investment. That's why I didn't do it. You shouldn't feel bad if you didn't do it as well. The point I was making to get to this idea that this is the best risk-adjusted moment to buy Bitcoin is history is we've removed all of the existential risks. The last existential risk, the one that I was still worried about as recently as 6 months ago, was that the US government would ban it. That one day the US government would feel the dollar was threatened by Bitcoin and it would ban it the way it effectively banned the private ownership of gold in the 1930s. And that was still a major risk. Like your investment could go down a lot if that happened. But now we have a strategic Bitcoin reserve. Now it's in the US's interest to support Bitcoin. So we've removed all of the existential risks from Bitcoin. And yet we still have a 10x to go before we match gold. And I think Bitcoin will ultimately be much more than gold. So there's still 10, 20x more upside and very little of this existential risk on the downside. There's no risk that Bitcoin is going to zero. It's like an incredible setup. That's why I've been so excited to be on the road and sort of help people realize this. It's the best moment in history to buy Bitcoin. But I do think it resonates. I think it's a very simple framing. one of the big challenges in Bitcoin is we come with all this anchor, all this history, all this Silk Road and Mt. Gox and all these negative stories, and really reminding people this is a different asset. This is an asset that Larry Fink just wrote in his annual letter could replace the dollar. I mean, we are in a different era of Bitcoin. And I think, explaining it this way sort of wakes people up. I do think it's an effective framing that is bringing people over the line.
Raoul Pal and Matt Hougan emphasize a long-term strategy for crypto, urging investors to see market dips as opportunities. Bitcoin has shown resilience, outperforming traditional assets despite economic uncertainty. Hougan highlights the role of institutions like BlackRock in reducing risks and driving adoption. He predicts significant gains as crypto matures into a dominant asset class. What are your predictions for Bitcoin's future? How will institutional involvement impact the market? Share your thoughts.
So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. So Bitcoin goes up as the ISM goes up. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle. But if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. We are still early stage within the final year of the crypto bull market when a lot of the big gains come. Have patience, see the bigger picture. Also, how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course, which is you can only have a small part of your portfolio in the smaller tokens. Yes, I also understand we were not sure whether it was going to follow this exactly because we had an identical setup in Global M2 in 2017 in the last Trump cycle. And what happened is crypto collapsed 35% in a week and then slowly recovered with CHOP. I wasn't sure whether we were going to have the full sell-off to follow this pattern or we were going to go sideways over the period. We eventually went sideways first and then had the sell-off. Either way, it's on track exactly as Global M2. What it's saying to you is that financial conditions that tightened last year due to the dollar rallying in anticipation of Trump and also rates going up in anticipation of tariffs, well, that is what's playing through now. Now, if you look at the chart going forward, that reverses. Yes, there's going to be a period of chop. We're going to be finding the lows around here, and I'll come more on that in a sec. Then there's a period of chop, and then we start coming back up the other side. So it's nothing to concern yourselves with. Volatility is part of the game. Without the volatility on the downside, you don't get the 150% returns or more on the upside. So financial conditions are kind of the big daddy of all of this. And the 3-month and 3-month rate of change of Bitcoin is driven by financial conditions, which leads by 3 months. So financial conditions obviously tighten because of the dollar and rates back in last year. Now Bitcoin has fully priced that in. So we're at the price point that is right. Now, could it then chop around along the bottom until it starts mirroring the rally in financial conditions? Possibly. This is also obviously very similar to the Global M2 chart because they're all highly correlated. I just want to show it to you in a different way. The next chart is what you're hearing a lot of noise about is there's an economic weakness coming. Economic data's coming out weak. Yes, it is. And it's been driven by the dollar last year. Again, there is a lead here, and the dollar strength last year is causing economic weakness. This is the reason everybody wants a weaker dollar. China wants a weaker dollar so they can stimulate. The world has a lot of dollar debts. They need a weaker dollar to service those debts. The US needs a weaker dollar to export goods. The global economy needs a weaker dollar. But first, we're going to see that weakening of the US economy because of what happened last year in the dollar. And then things will start to change again and the economic cycle will pick up. Now, that probably also means that rates will come lower because economic data is weaker. So that's playing into our idea that financial conditions are going to ease over time. So it's yet building a more positive case. No, it's not going to be a recession. All of that talk is nonsense. Economic data will weaken for a bit and then strengthen. But this is all good for us. Yes, tech stocks are slightly worried about weaker growth. But again, when we can look forwards using the analysis, we can see recovery is round the corner. Now, when we look at last time around in 2017 when Trump came in, we saw a very similar thing. Economic surprises fell off a cliff because the dollar had strengthened in anticipation of Trump coming into office. That then eventually reversed and the economic cycle picked up massively and the dollar weakened hugely. And that drove what was a very large crypto and risk cycle, even though the Fed were raising rates.
Raoul Pal and Matt Hougan discuss Bitcoin's resilience and its growing adoption by institutions like BlackRock, highlighting reduced risks and a promising future for the crypto market. They stress the importance of a long-term view, emphasizing that the current environment is primed for significant growth in Bitcoin and other digital assets. Both experts predict a transformative phase ahead, with Bitcoin poised for parabolic growth as adoption deepens and financial conditions ease. They encourage investors to stay focused on the bigger picture, seeing crypto as a cornerstone of future global finance. Will institutional adoption drive Bitcoin to new highs? How can individual investors best prepare for crypto's next phase?